It's about that time of day again. My name is Joseph. Thursday evening, December 6th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for trades tomorrow morning in our trade room. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Crude is bearish and trading at the high of a range tonight, and that tells me to wait for the buyers to try twice before selling back down to the range low tomorrow morning. The S&P is bullish with a short covering rally. With the buyers trying to go back to retest Wednesday's high, my plan is to look for bear traps for selling opportunities at some key support levels tomorrow. Nasdaq is also bullish with a beautiful 1, 2, 3 reversal pattern. That tells me exactly where I can find the most reliable buying opportunities near that hidden channel low tomorrow morning. And of course, gold is bearish, trying to complete the pendulum swing target, and I have my eye on some bull traps up above those range highs for some easy selling opportunities. And last but not least, on the euro tonight, euro is bullish and trying to break free of the weekly trading range with a strong run higher. But since this is a range, I'm looking for these buyers to try one more time so I can sell right into their stop losses for a move back down into the range tomorrow morning. Well, we're back after a day off on Wednesday with some excellent opportunities setting up for non-farm payroll Friday. We got some major trend reversals. We got a couple trading ranges, and as always, a solid plan of attack for tomorrow morning's trading session. But before we get to those charts tonight, before I put the plan together for Friday's session, I need to remind you, please make sure you never miss another video by joining our mailing list. The opt-in form is right there on the homepage here at Sideways Markets. Give me your name and your email address, and I'll shoot you an email every time our nightly newsletter goes live. Also, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts, which are located right below the video tonight. Go to sidewaysmarkets.com, and you'll see a big button right below the video tonight to download all of those charts. And don't forget, if you have any questions about anything covered in this video tonight, you can post those questions in the comment section below, or you can always pick up the phone, call that toll-free number, or use the live support tool in the upper right-hand corner. And also, if you like what you see here tonight, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post something new. And as always, it is great to be here with you guys and gals this evening. You'll have to bear with me a little bit. I've got a bit of a head cold here. Day off yesterday. Managed to find a way to get sick yesterday. But I wanted to push through this newsletter for you guys and gals tonight. So pardon the voice. Hopefully my energy levels will stay nice and high for you guys here. But of course, as always, we'll push through this. I want to make sure you guys are ready here for tomorrow's trading session. So let's not waste any more valuable time. Let's get ready for tomorrow's session by taking a look at the economic news calendar here for tomorrow. Tomorrow is Pearl Harbor Day here in the U.S., Friday, December the 7th. This is the first Friday of the month of December, which means anytime we have the first Friday of the month, we always know everybody's looking at that employment number at 8:30 Eastern Time. Now, we heard this morning a relatively disappointing number from the ADP employment report. Came out well under expectations. People do still see the jobs market as being strong, but there's a lot of analysts out there that are predicting this may start leveling off. So that means all eyes and ears are being focused on that employment number tomorrow morning at 8:30 Eastern Time. Now, really quickly here, the most important thing I can advise whenever you're trading non-farm payrolls, the employment situation as it's listed here, most traders call these non-farm payrolls or non-farm Friday. Now, first of all, this is going to be a day that won't be like anything else. This is the biggest news we get as traders. In my experience, it has more impact than FOMC, more impact than GDP. This is usually the biggest news that we get. And I'm going to give you a big tip. Usually the best trades for non-farm Friday don't even happen on Friday. They usually happen the Monday after. So the moral of the story is don't waste your bullets tomorrow if we're not getting great price action or if we don't see your setup. We'll go over what my setups will be for tomorrow. But if we don't get them tomorrow or whatever the case may be, it's been kind of a weird week this week with that day off on Wednesday, right? We saw kind of how everything got shifted back and forth here this week. So tomorrow, big news tomorrow at 8:30, don't force it. It's not worth it because we typically get the best trading 24 hours later, right, which is that Monday following non-farm payrolls. So that's the first thing, right? Save your bullets because we usually get the best moves the following Monday. We call it Reaction Monday. The next thing I want to remind you is that this news report is always the first Friday of every 1 month, which means everybody sees this news coming. What that means for us is that all the analysts have had all the time in the world to get their numbers to their traders, and most of the big trading firms have already they're already into their positions ready for this news to come out. The bottom line is most of these markets have already priced in what most of these analysts are thinking this number will come out tomorrow. Why is it important for you? Well, because if the number comes out within expectations tomorrow, the market will typically be relatively slow after that news comes out. If the number comes out outside of expectations, that will be above or below the that zone of numbers looking for tomorrow, then it will typically move very fast. So there are two different types of personalities that we see directly after that number comes out tomorrow morning. Again, if the number comes out within expectations, within their range of expectations, most traders have already, again, we're day traders. I'm not talking about day traders. I'm talking about long-term traders, big asset management firms, the people who actually move these markets around. Most of them are already into their positions ahead of this news because they know what to anticipate. If the number comes out as they expected, they're not going to do anything. They're just going to let those trades run. But if the number comes out outside of expectations, successful traders, big trading firms, they've got a plan A, a plan B, a plan C, so they will quickly and usually quite violently maneuver their positions around after that news comes out. So the moral of the story is, what you need to be aware of is after that news comes out tomorrow, it'll typically be either too fast or too slow to trade. I always recommend give it at least 10, maybe 15 minutes after that news comes out tomorrow before you even consider touching any markets that you want to be trading. Also, before the news comes out tomorrow, be very, very careful. Like I mentioned earlier, most of the big trading firms will already have themselves in their positions, which means anybody trading before the news is either a rookie retail trader or doesn't know any better. Now, of course, there may be some stuff that happens overnight. There's always potential, that there is some movement overnight, and there may be some news from China. We were seeing some breaking news here this afternoon regarding some journalists in China. So we may see some stuff hit the headlines in the overnight session. That may be enough to get things moving here for us, but just be careful before that news comes out tomorrow, because usually the volume is very light. It's usually quite uneventful. Last couple of months we've seen some good moves beforehand, but historically though, try to be careful before that news comes out tomorrow. And then again, whether it comes inside or outside of expectations, that will usually determine whether it's fast or slow. But it doesn't matter, because either it's too fast or too slow to trade. We'll give it 10, maybe 15 minutes after that news comes out before we start trading the reaction. Last but not least, tomorrow is a Friday. And of course, Fridays always mean early in, early out. We know that we have to have a good reason to be trading on Friday mornings after 11 o'clock Eastern time. So get to it early. And as you can assume now, there's going to be that window tomorrow between about 9 a.m., after that news comes out. Give it some time. That 9 o'clock to 11 o'clock, those 2-hour blocks there, that's where most of our trading is probably going to be the most reliable tomorrow morning. And I have to say, traders are human beings, and human beings are creatures of habit, And I mean, the only people that are more superstitious than traders are probably baseball players, traders are really superstitious. I do the same thing the same way every single day, because that helps me isolate anything that's different. Because when things are different, I get important clues that I can use for trading ideas. The moral of the story is, what I want you to pay attention to is tomorrow might not be a very easy day. A lot of traders probably got thrown off by that day off on Wednesday, For the most part, today was a catch-up day. And what you're going to see tonight in the charts is that we are seeing a lot of markets that have potential now tomorrow to kind of pull a mulligan and go all the way back to where Wednesday started. We'll talk more about that in a moment. But tomorrow might not be the easiest session because you've got this sense of scarcity, and you've also got this at the same time, it's just a little bit different than normal. And when professional traders are faced with uncertainties, most of them will choose to be more conservative than to be more aggressive. So my best advice to you would be get there early tomorrow, get out of there early tomorrow, be careful around that news. Do not be a hero, right? If this thing really starts ripping around 8:30, 8:45, follow that trend direction. Do not fight the momentum of the market coming out of that news report. And remember, we'll be in our trade room 8 o'clock Eastern time tomorrow morning with a front row seat for that jobs number tomorrow morning at 8:30 Eastern time. So come out and join us, and we'll plan everything ahead of time and do it together. So now you know the basic idea for tomorrow. Early in, early out, easy around the news, and don't force it, right? Because we know that the Monday following non-farm payroll is oftentimes where the biggest and easiest opportunities are going to come. All right, let's jump into our charts now. Sorry for the long-winded introduction. I know my voice is a little bit scratchy here right now, but I'm going to push through it with you guys, make sure you're ready for tomorrow. Starting off on oil tonight, we'll go oil, S&P, Nasdaq, gold, and then of course over on the euro. Crude is bearish with a trading range, a pendulum swing, and a support trend line and round number on the chart this evening. The trading range has a bear bias. You can see a bearish move into that trading range. That tells me to sell up above the top of that range using the 2-try failure pattern. The pendulum swing, right? We have that trading range. The pendulum swing, the amount of the move below the range, projected higher, I call it the pendulum swing, right? The pendulum swings down, the pendulum swings up, right? That pendulum swing combined with the range expansion. Take the size of that range, copy and paste it up. That creates resistance. Copy and paste it down. That creates support. Okay, that pendulum swing combined with the range expansion level really gives us a great area here, a great resistance area to look for that 2-try failure. But this rising support trend line, you can see it coming off, right, these lows. This rising support trend line reminds me to make sure I clear below it. 1 try, 2 try, and use it as resistance, right? I don't want to get caught here now trying to sell, right, into that level of into that level of support, because it's going to be a trap here for those bears. So we know where the market's bearish right now. We know we have a trading range. Bear bias says sell at resistance. Trading range says use the 2-try failure, right? I get a level of resistance up around 52.32. 52.13. I know I've got my trading range. I know that says use that 2-try failure. All we got to do here is get around this rising support trend line. So as we go higher here, ideally I want to use that 2-try failure. 1 try up, 2 tries, and use the underbelly. Use that trend line, right, as a level of resistance. And believe it or not, there'll actually be 2 opportunities on this. There'll be what we call a 2-legged pullback, which is the using of that trend line as resistance. Then we also know where those seller stops are as well, right? We know exactly where the stops are, and we can sell right into those stops as well. So there are 2 easy selling patterns here. One is called a 2-legged pullback, the first one, because it uses that trend line. The next one is called a 2-try failure, 1, 2, and you're literally selling right into those stop losses of those, right, of those buyers. Now, I mentioned earlier that oftentimes when we have a day off or if we have a holiday, what happens quite often is you'll see, let's see for example here, what happens most of the time is it's a Monday holiday. You know, it's a Veterans Day, it's a Columbus Day, it's whatever, right? It's a Monday holiday. And what happens is, right, you get this almost zero volume, right, holiday session. This week it was a Wednesday, okay, and you get this really light volume session. A lot of times what happens is by the end of the following day, this market will come all the way back up and go right back to where we left off. Does that make sense? It's almost as if like because the markets are closed that day or it's a holiday, right? All of this is kind of off limits. But in the following day we come back now, right? We come, and again, I'm using Monday, Tuesday. In this week's example, it'd be Thursday, Friday. We had Wednesday off, right? We're looking at potentially now by the end of the day tomorrow going all the way back to where, right, we started from. Now, again, I know it's a little bit confusing because we had Wednesday off this week, right? But this is, right, here's the Wednesday high, right? There's yesterday, Wednesday. That was the day off. Right, very low volume, very, very difficult to trade those days. Well, as you can see though, right, if we can get a short covering rally here, keep your eyes on that 54.45. Now, this is pretty easy on crude. On the E-minis, it's even more dramatic. So the kind of the bottom line here is that oftentimes when we have a day off or it's a holiday, right, whatever happens on that day, if we end up going lower, we'll end up coming right back almost like a do-over, right? Almost as if to say, okay, let's go back to where we came from, and then let's start from there. And so that's definitely something we're watching here tomorrow. How would this market reverse? What would a reversal look like? We call it a 1, 2, 3 reversal. Got a couple of these tonight on the charts. A 1, 2, 3 reversal. Now, first of all, right, it starts with a strong counter trend move. That's 1. Then a pullback to the moving average. That's 2. And then 3 is a strong move off, right? A strong move off the moving average. The key is it has to pull back to that moving average, and we have to see the explosive move off the moving average. Once we get that, then we can mark up this swing high, mark up that high, and then bring it down to the base of that move, right? And find that hidden channel. Now that gives us the sweet spot between that high here and the low of that channel, and that's now where I want to be a buyer on the way up to, again, kind of, pulling a redo, right? Going back to where we started from, right, on the day off, right? It's almost like the day, the day off, low volume, we come back. Okay, let's go back to where we left off, and then we'll get back to business from there. So we're watching for a 1, 2, 3 reversal pattern with a hidden channel. We're watching for a 2-legged pullback. We're watching for a 2-try failure. Lots of great ways to trade this stuff tomorrow on crude oil. I'm going to keep going. We got the S&P up next. But if you want to see more information, if you want to learn more about reversals, if you want to learn more about the 2-try failures, and if you want to see hundreds of examples of those patterns on real charts, I've got a great free trading class for you. I'll put a link right up top in the upper right-hand corner. I'll also link this up below the video tonight on our blog. It'll also be in the description of the YouTube video. Grab that big red button below the blog, or grab the information icon in the upper right-hand corner there, right? Register for that free trading class, and that way you can learn more about all of my favorite entry patterns, because we're going to keep on moving here. And again, tomorrow morning, we're going to execute this strategy together at 8 o'clock Eastern time. Let's keep rolling. How about some S&P? S&P is bullish with, what do you know, a 1, 2, 3 reversal, a strong bull run, a hidden channel, a reversal line, and a measured move on the chart. So lots of stuff going on this chart right now. The strong bull run feels like a short covering rally, reminding us that whenever we have a market closing, like we did yesterday, the following day oftentimes tries to go back where it all started, right? Here's that Wednesday session. We're trying to go back to where it all started, around that 27.20. Now that's a big, big clue. The 1, 2, 3 reversal is a big clue, right? 1, 2, 3. That's a big clue, right? That 1, 2, 3 reversal. Now, what does a reversal tell me? It tells me to mark up these highs, bring it down to that low, and that's where I now know, combine that, and that's now where I want to be a buyer, right off that sweet spot. That's the ideal, right? That's the ideal situation, right, for tomorrow. Once we see the explosive move higher, we illustrated this earlier on crude oil, and you can see this setting up here now on the S&P 500. So a real nice strong bull move up, right? Nice strong bull move higher here. That is a 1, 2, 3 reversal. We started off bearish. Now we are 1, 2, 3 reversal, running right into that measured move. So I don't want to buy high here right now, but I do want to make sure I buy before we miss this opportunity back up to that 27.20 area, right, overhead. Now, what if price pulls back, right? Price pulls back to low of that channel. What patterns are we looking for at that point? If we can get that pullback to support level, there's a couple different patterns we can look for. One is going to be if we see a sharp pullback, right? That sharp pullback, we can then look for that 2-try failure. In other words, let those bears try to sell that pullback right off the moving average. It'll oftentimes look like this, where it'll go up, it'll pull back, those bears try to sell it, and we're buying right into their failure, right? Same thing. We pull back. It confuses the bears, right? It makes the bears think this market's bearish. They try to sell off the moving average. This creates what we call the 1-2-try failure pattern, and I can now buy right into those stop losses. I can buy right where, if I was a seller, right where my stop losses would be. Now from there, I don't want to chase after that move going higher. I now want to mark up a hidden channel and look for the hidden channel pullback pattern. And again, you can learn a lot more about this pattern, right? This combination setup, this 2-try failure into hidden channel pullback. You can learn all about this setup, this kind of combination setup inside that free trading course. It's linked up right in the upper right-hand corner there. You can grab that and get registered and learn that pattern. Another chance too, again, we're trying to buy off the low of this channel. Another example of that would be, right, we're coming down and we're using a trend line as support, right? We call these a two-legged pullback. Imagine now we pull back, right? Nice strong pullback off of it, draw that trend line down. Yes, this could be a 1-2-try failure, but you can also look at it as a buy off that trend line as well, right? So you're buying off that trend line, you're buying into those stops, right? You're buying the pullback, right, off of that hidden channel pullback. Right, so 3 real easy patterns here as we pull back off of those highs. But what if we don't pull back off the highs? What if we go sideways here, Joe? What do we do? Right? Well, what is sideways? What if we start going sideways on the chart? What if this moving average starts going flat? What if we start seeing double tops on the chart here? That would give me a sideways range. It's a bull bias into a range. So the plan is I'm going to take the size of that range, copy and paste it down. That will create a level of support, and then we're going to use a 2-try failure pattern. Let those bears try once, let them try twice. A 2-try failure pattern to buy now, going back up right into that range. And maybe we get lucky and we can incorporate the low of that channel too, right? At that point, it won't be completely necessary to incorporate the channel, but it definitely won't hurt, right? So 1 try, 2 try, and then back up from there. Now, another question, what if we keep going higher here? Because this is definitely a short covering rally, right? There are not going to be a lot of buyers on this. These will be sellers, right, who are short off of the overnight, sellers as they get out. What if this market keeps on going higher here and we don't get the pullback? If that's the case, this will turn into a spike and channel, right? And of course, a spike and channel tells me, look left, find those prior swings, and we're looking for trap patterns, traps into failures and back up, right? So if we do keep going higher here, that's not a green light to just abandon your strategy. The strategy always is to buy at support, buy low at support in a bull market. And again, if we keep going higher here, wait for that price to pull back with the objective, right, of buying at a swing low, buying with traps, those prior swings, using the 2-try rule, 1 and 2, right, for that move back higher. And again, as of right now, we're looking for that move up to that 2720 area because we assume that's where, right, that's where these sellers are going to allow this thing to come back to, because again, we had that Wednesday session off, and it usually will play catch up, right, after the fact. Let's keep going. How about the Nasdaq right now? Nasdaq also very similar here to the S&P 500. Nasdaq is bullish. It is a 1, 2, 3 reversal, has a hidden channel and a measured move on the chart this evening. Excuse me. The bullish 1, 2, 3 reversal, right? Bullish 1, 2, 3 reversal. You know, right? You know what this means. That means this is, right, this is definitely a bull market, but I don't want to buy high here, especially since, right, especially since we've got that Wednesday high right overhead. So the S&P and the Nasdaq are very similar in a lot of situations. We're bullish. We have a 1, 2, 3 reversal, but that's about all that it is. That's about all we have that is the same. The problem with the Nasdaq is, or not the problem, but the differences on the Nasdaq right now is that we have that 61 3/4. We're knocking right on that doorstep, and right above that is the measured move. If you recall, the S&P has plenty of space here. right, to make that run. And this thing can keep going here for a pretty long time here. The Nasdaq is right there, right? So we have to assume that we are low on space right now. We have to assume that most traders are going to see this as too high to buy, right? Too high to buy. What does that mean? Well, whenever I find myself in a situation where I'm too high to buy, in other words, once we get towards resistance, not as many buyers up there, right? There'll be a lot more sellers up there than buyers. So I'm going to buy too high right now. I start looking for a deep pullback, and I start looking for an opportunity to catch sellers on the wrong side of the market. Knowing that these buyers are running out of open space here, I'd like to see a nice deep pullback so I can free up some open space to make it more worth my while, right? Kind of wet my whistle a little bit there, right? Get that opportunity here to risk small, right, and to earn large. If I buy right here, right, my risk is small, but my reward is even smaller. So it doesn't make a lot of sense to go buying right here. Even if it keeps going higher, I still want to wait for that pullback. Yes, I do expect price to go higher here. I just hope it pulls back in the short term. Now, as always, a 1, 2, 3 reversal tells me mark up those highs, bring it down to that low, and I'm telling you, it's very tempting to want to put this hidden channel right here, right? Or even tighter right there. That will also work, right? You could call that a spike in channel, right? Spike in channel. I'm still going to wait for a pullback. I find the best way to do this is once you see a 1, 2, 3 reversal, then draw out that hidden channel, right? And that trend line is the one I'm looking to use for tomorrow. So what's the game plan here? What if it goes lower? If it goes lower here, that's the easy part, right? If we go lower here now, got a couple different options here, right? Maybe we get a two-legged pullback. 1, 2, that creates a trend line. Then we can use that trend line as support, right? We call it a two-legged pullback pattern, right? The two-legged pullback, right? That support coming off that trend line. That's one option. Or maybe we see a nice strong move lower here, right? Not a two-legged pull, but a strong move lower. Then we have to use that 2 try. 1, 2, right? 1 try goes lower, 2 try off the moving average. Then we're buying into those stop losses. Then, of course, we're finding that new hidden channel, and we look for the hidden channel pullback, right? Those are 2 more patterns we can look for. It's a stop run, right? And of course, it's a pullback to the low of that channel. These are the same patterns we just talked about on the S&P as well. And again, if you want to learn more about those patterns, grab that information icon in the upper right-hand corner here, or follow that big red button right below the video tonight on the blog, and you can, of course, take part of that free trading class, and you can learn more about those patterns there. Now, what if we go sideways here? I would imagine we probably will at some point here in the Nasdaq. Because we're so high up, nobody's going to want to buy up here, but I doubt people will be taking their profit because we haven't hit that measured move yet, right? The measured move is the big objective. So the reality is I would expect this thing to want to go sideways here. If it does go sideways, and again, if we see double tops in a bull market, it'd be double bottoms in a bear market, that would tell me we have a range. Once we have that range, then again, as I mentioned before, we'll mark up that range expansion level, right? Same size of the range. We'll mark up that range expansion, and then we'll look for that 1 try, look for that 2 try, and again, let those bears try once, let them try twice. Maybe we get lucky and we can incorporate the low of that channel. If we go sideways, though, it's not going to be necessary. All we need is to get the 1, the 2, and then we can buy right into those failures for that move going higher. Now, speaking of going higher, how would we go? What if we go higher here? What if we just keep on grinding higher here? Not much changes, except for the fact this will become a spike in channel. And whenever we see a spike in channel, I always look back at the base of that channel. Those first 2, that first swing, the first pullback, and the point where the channel collides with that spike, that's usually going to be your best area to buy, and we'll look for that buy off of that area. It'll probably be a 1, 2 failure, or right, possibly here a 2-legged pullback, right? All those patterns we talked about earlier will be in play here. So again, if it keeps going higher here, it doesn't just give us the green light to start buying. We always want to make sure we follow our plan, stay disciplined, and buy at support. Because if we buy at support, it puts us in a great spot to risk small, right, to earn large. Beautiful example here of a 1, 2, 3 reversal. We've seen a lot of them here so far, but that's about it. because now we're on to some trading ranges here, and from the Nasdaq to the Eminis over to the metals and the currencies, gold is bearish with a trading range and a pendulum swing on the chart this evening. The trading range tells me to buy the low and sell the high using the two-try failure pattern, which you'll learn more about in that free trading class. The pendulum swing, though, tells me to look for the move down to the opposite side of this range. Right, combine both of these clues, and I can confidently look for shorts using the two-try buyer failure pattern above the range high. But I'm going to have to stay patient as this price goes lower because we are expecting quite a big pendulum swing overall to the opposite side of this market. So we got a couple things to look at here, right? Trading range. What does the range tell me? Range tells me one try, two try, back up, one try, two try, back down, one try, two try, back up, one try, two try, back down, right? Buy low, sell high. It tells me one try, two try, back down. It tells me one try, two try, back up. It tells me buy low, sell high, and focus on failures while staying away from that middle. Now, the momentum right now is bearish. You can see as the market collapsed off the highs, that momentum is clearly bearish right now. So with a bearish momentum, I can get relatively aggressive with this. If we get back above this moving average, I'm looking above that 46 area to 48 area, get above that moving average, let those buyers now try to buy the breakout. That becomes the one, the two try failure, and we can sell right into those buyers' stop losses, right? Again, we've seen a couple examples of those already. Now, next up here, as we go lower, right? As we go lower, this is where we're going to have to be a little bit more patient because we have the size of the move up tells me the size of the move down. Now, you might be wondering, how do you know if you have the right pendulum swing? It all starts with having the right range. And you'll notice this range, really tight, narrow range. At first, it looks like the range would probably be something like that. But if you draw it like that, it doesn't explain this one, this one, this one. There's a lot of things it doesn't explain here if you draw that range really wide. When it comes to drawing trading ranges, you have to make sure it all makes sense. All those bounces, right, back and forth. So the bottom line is we find the right range first, then that helps me calculate the pendulum swing. The pendulum swing now tells me I can expect those sellers to run this thing back down to that 37 area. I've got 36.9, 37, 38 area. It's not going to be exactly correct, but it'll be that area on the chart. So again, because momentum is bearish, I can easily get aggressive with a 1, 2 try failure pattern there above the moving average, above the range. However, as we're going lower here, I've got to be careful, right? Because ideally, I want to wait for it to finish off that pendulum swing. Now, just look at how I draw that for a second, right? That's a real strong move, right? If this thing continues, if it keeps going lower here, this market's going to feel really bearish, isn't it? That's probably not a good idea to buy that market at that point, is it? Probably not, right? Probably not. So whenever we see a real strong move in one direction, rather than just simply taking the two try, we look for, we call it a nested two try, which, for example, we saw earlier on gold. Strong move up, right? It's a real strong move. I'm not going to sell that. I'm going to wait for those buyers now to try once, try again, and then we'll sell into it. We call that a nested two try failure. So just kind of imagine now for a moment, we finish off this move down, right? At this point now, it looks like there's no coming back. Right? That's a real strong move lower. Momentum is very, very strong when it collapses all the way down to a pendulum swing. The bottom line is that there are going to be sellers waiting up here trying to finish this move off. Anytime we see a strong move in one direction, we almost always see a follow-up leg. So we're expecting to see bears coming in and selling into that pullback. And what I'm going to do is I'm going to try to beat them at their own game. I'm going to let them sell. Right? I'm not going to take it now. I'm going to wait for a higher high, do it again. What ends up happening is it becomes a first try, and then we look for a 1, 2. It's what we call it a nested two try, right? It's a two try inside of that first try. Because in all reality, this could go 1 and 2 and really collapse. This could easily turn bearish, right? By just getting this big pendulum swing, comes up and completes the move. If we get that second leg coming down, that's a bear market. And we'll have to wait for that momentum to shift back up. what I want to do is I want to see them, first of all, complete that pendulum swing. Hopefully, we've got a runner on it, right, off that high, right? Hopefully, we're selling off the high and we're holding the runner, right, all the way down. Hopefully, that's the case. Assuming, though, we get that big move down now, don't get too aggressive down here. Let those bears try once, right? Let them try again. And once we see that second try, right, then we can start looking for that buy going right back up. There'll usually be a higher low. That'll give you some support to use, right? And you can buy right back up off that, right, off that low and back up into that range. Okay, the word that I use to describe it is absorb, right? It has to absorb the momentum. That's what's going on, right? That nested two try, what it does is it absorbs all of that bear momentum, right? It lets them try once, right? Oh, you don't like that? Try it again. Get it out of your system, bears. And once you're done, I'm going to buy right as you're getting stuck, and I'll buy right into your losses, right to your stop losses. So that's the way I'm going to trade it tomorrow. Hopefully we get it 1, 2, back down. Big move down, yeah, nested two try, back up. Stay away from the middle here. And, you know, one last reminder, tomorrow's non-farm Friday. Out of all of the markets tomorrow, gold is the one that will usually be the most volatile, the most unpredictable. So like I mentioned earlier, don't waste your bullets on bad trades tomorrow. Live to trade another day. Monday is almost always a better session, that reaction to non-farm payrolls, right? A lot of times what will happen is people come back to their desks on Monday morning, they get a clear mind, they read the report, and they'll be much more effective. The marks will be easier, right, that following day. So just keep it, right, keep it simple tomorrow. If gold is really rocky and really choppy, just be very careful. And again, tomorrow morning we'll be in our trade room bright and early, 8 o'clock Eastern time, to make sure that we do it all correctly. Now, last but not least here, this is the euro. The euro is bullish with a trading range and a strong bull run on the chart tonight. The trading range tells me to fade the breakouts using that two-try failure pattern. But this strong move higher, however, tells me that the buyers are probably going to try to retest that high. We just talked about this, right? We just talked about this. Anytime we see a strong move in one direction, we have to think they're going to try to get that next leg up. And so what do we look for? We look for the same thing we saw right earlier on this week. Strong move up. You're not going to sell that. I realize this one worked, right? I realize that one worked, but you don't want to trust it. You can't trust it because it's just the momentum's too strong, right? What I'll do is I'll wait for the 1, I'll wait for the 2, and then sell into that failure. It's that nested two try. So the bottom line is there are maybe 3 or 2.5 different things in this chart right now. One is the range. The range is by far the most important clue here because the range tells me to fade the breakouts, right? Sell off the high, buy off the low, right? Kind of a half a clue here is the pendulum swing. The amount of the move above the range is the amount of the move below the range. So I'm definitely watching this 12,800 area tomorrow, right? If this party really gets going. The big clue here is this big strong move, right? It's not just a small leg up, 1 try, 2 try, back down. It's a real strong bull move. That strong bull move tells me that as we pull back, buyers are going to try to make a run to retest that high. So ultimately, there are 2 different patterns I want. Both of them are going to absorb that bullish momentum. First one is the classic nested two try. If we go up, there's the 1 try there, right, for the bulls. We pull back, right, here's kind of the nested two try, right, 1, and then of course, oh, sorry about that, 1, and then back, 2, up, and then I'm going to try to use this trend line. This is the, what is it called? The inverted triangle, the megaphone pattern, the bow tie pattern, right? It's coming off that old triangle that we had at the beginning of the week. And you can see they're holding it, right? They're loving on that triangle level. So if I can get that trend line to hold, right, after we get that second try, that's one easy option. There'll also be a trend line coming down overhead to protect me, right, with falling resistance. Does that make sense? Make sense, guys, right? It's very similar to this pattern back here. Right, here we have a strong move up, It's just too strong to sell into it. I realize it collapsed off it, but that's in hindsight. Everything's easy in hindsight. In real time, when that thing jumps up like that, you know buyers are going to come in, try to buy it right back to retest that high. And if they can push it higher, it'll be reversal, right? 1, 2, 3 reversal, or 1, 2, 3 breakout. Okay, we'll wait for that in a moment here. Bottom line though is I've got 1 try for the bulls. I'm looking for 2 try for the bulls, and then try to sell, right? Again, into resistance, right? So resistance there. Resistance there, that'd be a great spot. That way I absorb all the bull momentum, right? And I can sell once those buyers have that rope wrapped right around their neck. Now, what if it goes higher here, right? If it goes higher here, this is where we're going to look for a little more aggressive entry, right? If it goes higher here, I'm looking for a nice, strong trap high off of that prior swing, right? So above that high, I'm looking for that nice, strong trap high to sell back down again. Right? I call these crown reversal patterns. Crown reversal patterns. You'll learn more about the crown reversal patterns in our advanced classes. Okay, a couple tricks we have up our sleeve for those crown reversals. If you're a client of mine, you know those patterns pretty well, right? Looking for that bounce up. And just remember, you're going to want to see it really hit and slam back down, right? Slam back down. Now, what if we make that retest? Right? What if we make that retest? If we make that retest of the high, it's basically one of 2 scenarios. Either one, it blasts through the high, and if that's the case, then obviously this becomes a breakout, this becomes a hidden channel, right? And we're buying off the low of that channel, right? That 1, 2, 3 reversal, 1, 2, 3 breakout, right? We're buying the low of that channel. It's the same stuff we talked about, right, throughout tonight's video. The other scenario would be, though, right, if we go back and retest and we pull off, it's the nested 1, 2, and then back down we go, right? It's the same basic pattern we see there. Up, 1, 2, and then go, right? 1, 2, and then go. All right, guys? So relatively easy plan. We get the plan put together here. If it goes lower, nested 2 try. If it goes higher, trap, crown reversal, right? Or if it goes higher and keeps going, yep, find that new channel, buy below that channel, or, right, or it goes up, 1 try, 2 try, nested 2 try, right back down we go. Now, what if price collapses here? What if we get nothing? If it collapses back down, again, watch that pendulum swing. This could get pretty ugly here for those bulls. It could get really good for those bears. If it rolls lower here, remember that nested 2 try we talked about for gold, it's a 1, it's a 2, and it's back up from there. So stay patient if it does collapse. I don't want to sell into the low of that channel, so get to it early here rather than chasing after it as it goes lower. All right, guys, getting ready for Non-Farm Friday tomorrow morning. I hope you guys learned a ton tonight. Don't forget, we've covered a lot tonight on this video. If you're brand new here right now with our newsletter, it is great to have you with me. Grab that free trading class. It's also part of our free trial. You can learn more on our website. If you have any questions, pick up the phone, call me anytime. I will look forward to answering all your questions. I've got live support on the right-hand side, and we have 3 levels of membership: beginner, intermediate, and advanced course. Our advanced classes are by far our most popular because they include the beginner and the intermediate. They include all the tools, all the templates, all the indicators, and of course, unlimited access to our daily trade room, which opens up at 8 o'clock Eastern time. You can learn all the details as part of that free trial, as well as a free pass to come out and join me as a guest in the trade room. And that'll wrap things up here for us this week. Tomorrow's a Friday, kind of a weird week this week, so we'll push through tomorrow. Going to be an early in, early out day tomorrow because of Non-Farm Friday. Again, we've gone over that scenario. If you have any questions, come see me tomorrow in the trade room, 8 o'clock Eastern time. Please remember, I don't do the newsletter on Friday afternoons. I will see you guys next time on Monday evening, right? And we'll into our second week of the month of December. If you guys are out there going to holiday parties this weekend, be safe out there, right? Be safe out there. Make sure you come back and see us all in one piece next week. And as always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.